TJ the Wheel Deal coming at you live. It is Thursday. I don't know the date. I'm working on it. July the 17th, 10:25 a.m. Central Time, Texas time. I think our crowd's going to be a little bit small right now because I think Amit is I call it A&N, the Mint News Network, is still alive, and half of my viewers come from his channel. So anyway, I want to talk a little bit about my evolution as an option seller. And there's a lot of people, yourself included, that have been putting bugs in my ear over the years saying, hey, owning shares isn't capital efficient. Mm-hmm. And I'm like, yeah, but shares don't expire. Options do, right? That's kind of the battle that we've been on, right? So right now, as the portfolio sits, mm-hmm. I don't own any shares of anything. An option, it feels fucking good. Yeah. No, it feels liberating because I'm like, oh my God, NEO's up $1. Oh my God, NEO's down $1. Oh my God, SoFi's up $1.50. Oh my God, SoFi's down $1.50. And it creates this anxiety. And if you're not going to buy or sell that underlying today, why are you so worked up about it? So owning so many shares, no matter how you want to slice and dice it, I have come to the conclusion, forget capital efficiency or deficiency, inefficiency, whatever the word is, it gives a shit. I make a lot more than a fucking English teacher. So I'm in my own fucking words here, okay? I'm just fucking with y'all. But, I'm not saying be rich and dumb. That's not what we're promoting. But what I'm saying is it messes with you emotionally because you're seeing your portfolio bounce up and down whenever you own 500,000 shares of a certain stock. So my thing is now, like, I'm forming a new, it's like sell put, sell cost, collect premium, roll when it makes dollars and cents. That's kind of like the taglines for the channel, right? Mm-hmm. So one of the other taglines that I'm kind of branding, if you will, it's not about owning stock. It's about knowing how to make money off that stock.
Correct.
And it's not about an allegiance to a certain company or a certain stock or anything of the sort. It's about, can you make money with that ticker? And how can you mirror the deltas? Because when you own a share, it's one delta, right? Mm-hmm. Mm-hmm. One share equals a delta of one. That's just the way the math works out. Mm-hmm. So there's a way to create that type of exposure, but maintaining the flexibility of not tying up all your capital and all of your emotions. Granted, that's a job though, because you can own shares, you can set it, forget it, go live life, look up 10 years later and Amazon does Amazon things, Apple does Apple things and all those things, right? Mm-hmm. There's something to be said for that.
Yeah.
That's also why I have my 401k and long-term holdings accounts that I don't do anything with on options. Mm-hmm. But on a trading account where I want to sell options, I think for me, it's about, I want to maximize the amount of money that I can make, but I want to minimize the headache as well. And I'm going to tell y'all right here, right now, on the record, for the record, truth be to God, owning shares is a big fucking pain in the ass. It is a pain in the ass, and it's more work. And let me tell you why. Because now I got to go look at all the earnings reports. I got to thumb through the 10Ks. I got to thumb through the 10Qs. I got to look for the filings and all this other shit so I can really stay abreast of the situation. Mm-hmm. I put my strangles on. I'm just playing price wars with the market. I maintain my familiarity with these stocks, with these companies. I do the Cliff Notes version of the earnings, and earnings seasons and stuff. And I'm in the middle of an earnings season right now. We all are.
Yeah.
Bro, 0 earnings calls have I listened to. serious. I'm being dead serious because at the end of the day, I have my goalpost. This is the goalpost. This is the put. This is the put. This is the call. This is the goalpost. And I need the share to get kicked right down the middle, right? Or it doesn't matter. Just don't hit the bar. You follow me? Don't go outside. Don't go wide left. Don't go wide right. That's it. And then I just adjust the goalposts. That's all I'm doing. That's all I'm doing. The wider the goalpost, the less the adjustments, the less the credits. But I'm in this project. I start off here, right, with my goalpost. And then I get the first roll, second roll, third roll, fourth roll, fifth roll. And before you know it, it looks like that. And I'm like, dude, the ball just got to stay in the air, bro. And I'm good. And my expiration date is now like 21 days to expiration. That's really my expiration date now. Why? Because I want to eliminate the tail risk. I want to eliminate the gamma, right? Because I'm not your friend. It's the accelerator of the delta. And when it's going your way, it's great. When it's not going your way, it's not great at all.
Correct.
So I'm just tired of the $500,000, $1 million fluctuations in the portfolio, net asset, net liquid value on a daily basis. So it's been about a week now, roughly since I went no shares, portfolio fluctuating less than $100,000 a day now, and trending up and to the right, all-time highs. Again, it's just I'm finding my path, and I happen to be documenting the journey. This is not financial advice. This is not me telling anybody here, hey, dump all your shares and do short strangles. None of the sort. I'm just sharing my journey. Never on this channel have I told y'all, hey, you should put 75% of your net worth in SoFi. Thank me later. Trust me, bro. Source, right? I've never done any of that. I did it. Really worked out. You should have done it. You follow me? In retrospect, you should have done it. People thought I was crazy. Now I'm sitting on an extra $4 million that I didn't have before. So it's really awesome for me. I saw the opportunity, I pounced, but now I de-risked. Right now, I'm like, okay, I want all the exposure to SoFi, but I am not interested in owning all of those shares. So how can I maintain the exposure? I want all of the exposure to Riot. I believe in what they got going on over there.
Correct.
I have to own a bunch of shares to have that exposure, to be in the game. You know, so it's just, again, it's just my evolution as a wheeler, as an option seller. And I hope y'all can appreciate the candor. But option, what I want to do is I want to learn about you. How did you get to a point to where you're like, you have no interest in owning shares, bro? Because there's not one stock that I can tell you about at any price that makes you be like, oh my God, I want to go pick up 100 shares.
No.
So how did that happen for you? And then we'll look at the portfolio and kind of go from there.
Well, you know, like from when we first met, I always told you my worst experience was Mara. Right. Yeah. And it just scarred me when it was trading at $80 something, and you know, I had like 600-700 shares, and you know, I don't have a huge account. So if I'm thinking, well, okay, I can get 600-700 shares. I'm into the minors. I'm gonna go with it. And we saw what happened to it, right? And that was it for me. And you know, I just, you know, coming from the tasty mentality, I just got more creative and started realizing like, hey, I can create synthetics, right? I can create synthetics, and by creating synthetics, I'm still getting the same exposure, but it's not costing me that much. And I don't have to really worry about those you know, that tail risk, and we just going through a moment in the stock market just go down the way that it did, and now I'm holding all that risk. I don't have to do that anymore. So it's like, yeah, I probably never really own shares no more. And if I do, it's maybe I got to sign through, maybe the stock going down or whatever.
You became a long-term investor because you didn't have a good entry point, bro.
Yeah, definitely. But from that, you know, I'm like, okay, if I do pick up shares, it's because I got to sign, but definitely I'm going to get rid of them, you know, once I kind of sell calls and strangle my way out of it and do whatever I need to do. But I just don't see it. And it's not capital efficient. You know, when you can do much more, you know, with the account size I have, I can do the same thing everybody else is doing, you know.
Yeah.
It keeps me in the game longer.
Yeah. So anyway, I'm just stumbling through these comments and stuff. We're gonna get into it, guys. This is gonna be a special episode for you guys, so that I can really peel back the curtain and how I've gotten to this point. Mm-hmm. Because now, you know, I don't know, I just like spitballing, right? I was like, I looked at the size of the portfolio and I was like, this again, well, I'm on the Robinhood platform at the time. Yeah. I think I can make $500,000 a month. I remember Bill White was on that screen right there. Shout out to Bill White. I think I can make like $500,000, bro, and just selling cash secured puts. I was going through the wheel tracker, and like 80% of the money was made on cash secured puts anyway, and cover calls was just a pain in my ass. You know, yeah, owning shares is awesome, dude, from the standpoint that, you know, I own SoFi at like $5. Adjusted cost base is negative collectively of like negative 11. And then you ride that shit up to 20, $25 eventually. I mean, it's a beautiful thing. But there's a lot of work involved because of the strategy that I use, right? Like owning shares and then just letting them ride. Like on SoFi, on the actual app, I own like 105 shares only, something like that, 103, 105, because I use my rebates from the credit cards. And dude, that shit is up like 100 and some percent. I can pull it up right now. Mm-hmm. And I haven't done anything, because you're not allowed to do anything over there. So, you know, SoFi keeps matriculating up and to the right, it's going to keep going up, and I don't have to do anything. Mm-hmm. So that is something that there's something to be said for that, right? So like if I click on Max, 136% all time. Yeah. Well, again, it's a small number because they only gave me a $4,000 limit on the card. So I can't do much with it. You know what I'm saying? Like, and then this app is horrible, dude. Like I can't even figure out how many shares I own. Yeah, dude, this SoFi app, bro. Oh my God, it's just not good. Like don't get me wrong, everything's here. I just don't know how to use it. You know what I mean? And I'm just like, okay, cool. It'd be real cool if I just knew how many shares that was. But I guess I could just do the math. But that being said, and I'm sure there's a way, I just don't know how to do it. Yeah. But the thing is, here it is, 103.64 shares. My average cost, I don't even know. Oh yeah, my average is $9.10 on this particular account. And I just, when the rebate's there, I transfer it from the credit card to the active investing account, and I just type in SoFi. Oh, okay. And of course the number like 2 or 3 times, or buy, sell, whatever the hell the little thing is. I got $18 in credit right now, so I can go buy like almost 1 share right now. And it's a little bit of a hassle, but you can get the trade done, right? Yeah. And it's cool and it works. You know, I showed y'all that it works. 130 some percent. Probably had that credit card for a couple of years now. Okay. It's my daily driver, bro. Like whenever because it doesn't have a big limit, so I don't like going out there with the Discovers and the freaking Amex Platinum and having that freaking number all over the place. Just
get a little caught. Yeah,
you're not causing me a lot of harm with 4,000, right? Yeah. And I'll call SoFi and be like, hey, some fool freaking, you know, stole my card or however that works. It's not a big deal. It's $4,000 to me.
Yeah.
And then maybe SoFi helps me out. Maybe they don't, but that's why it's my card.
That's something I would think everybody should be doing. You know,
bro, I used to do it with my Capital One. Yeah. I used to do it with my Capital One because I have one since college. And I think I got 2 Capital Ones actually. One of them only got like $2,000 or $3,000 limit. That was always my daily driver. Yeah. Like before I had to test to like put gas, go to the grocery store, whatever. Just always charging up that little card and then paying it off every couple of weeks because I'm maxing it out all the time, right?
Exactly.
But nobody's gonna harm me. Mm-hmm. And then you're dropping off the card at the rental company, you're dropping off the card at the hotel. Yeah, you're not gonna do a lot of harm here with this number here. Hell, I'll post that in the you ain't harming me with no $2,000 or $3,000. But I ain't putting out my fucking no limit American Express Platinum. You know what I mean? Damn right. That could hurt. That could hurt. Not just financially, just psychologically, because now you're pissed off about it, right? 2 or 3 grand. I'm just, fighting with SoFi a little bit, trying to convince them that it ain't me.
Yeah, that's it. Damn right.
And moving on, right? Moving on. Go dust off the Capital One venture card. Because my go-to until SoFi get their shit together. But anyway, that's the thing, man. It's just an evolution. Again, there's a comment here where all the CEOs of our portfolios and all that stuff. It's true.
Oh yeah.
You gotta do you, man. Again, I'm documenting my journey. Mitt has documented his beautiful journey. But as content creators, if you will, even though I'm real small time compared to like the meat Kevins in the midst of the world and stuff, I don't ever want to like impose my beliefs on anybody. I'm a Christian man, dude. I believe in John 14:6, right? Jesus is the way, the truth, and the life. Nobody comes to the Father except through the Son. That's what I believe. And I believe that it doesn't end well for you if you don't buy into that narrative.
Yeah.
That's what I believe. But I'm not going to impose that belief on you. It was an individual decision for me. You got to figure it out for you. That's like a lot like option selling. Like I'm showing y'all that selling calls and collecting premium works, and rolling what makes dollars and cents really works because you're able to erase a lot of mistakes, right? Like rolling kind of like the magical eraser at times, right?
Yeah.
It can also be the magical compounder, right? Because it can compound mistakes. So it's like a double-edged sword. So again, I've documented that journey for you guys, but never have I told y'all you can't make money buying leaps. And I've shown y'all that I've made a lot of money buying leaps on the channel, a couple $1 million if y'all rolled the tape. You can buy the timely leap and make a lot of money too. So if you can play the role of the gambler, if you have enough time on your side, you can do it, halfway responsibly, if you will. When you see a depressed asset class and you're like, dude, it doesn't make any sense. Like SoFi, dude, a lot of the money that I made on SoFi was actually on leaps. It wasn't through the strategy. It was just like buying leaps, and they just printed and printed and printed. It was like I was swing trading leaps there for a while because the opportunity presented itself.
Correct.
Never made a lot of money with leaps on Riot. I had to earn that win over there. I had to sell the puts, calls, and stuff because the IV was always too high. So it really wasn't conducive for leaps. There wasn't an asset class that was conducive for leaps. I got real lucky. I made a lot of money with leaps on TSLL and Tesla. It doesn't normally happen either because they're higher IV. When it's higher IV, you want to be selling premium. You don't want to be paying premium, right?
Correct.
So anyway, let's get into it. Probably not going to make any moves today unless there's something that just really, really sticks out. But I want to talk about these positions and kind of talk to y'all from my lens, and then I want to see maybe what you see. So we're just gonna focus on two portfolios today. One's the little account. This is my son's account, and then we're gonna focus on the big one over here. I call it the family fund, if you will, the big account.
Correct.
So why do I got my son's account in purple? Is my favorite color. It's the color of royalty. I feel like I am royalty because I'm a child of God, right? That's what I believe. Again, this is just my beliefs. They're telling you what to believe. You follow me? So what do we got here? We're going to go here. We're just going to put here on symbol to get rid of all the order chain stuff. So we have 3 short strangles. We have hood sitting at 80 and 120. This is 29 days to expiration. So the way that you read this, you have the ticker. You have the last price. This is the change. The 215 is the change of the day. So hood is up $2.16 for the day. The last price was 105.42. Let me make this slightly bigger for you guys. The trade price is currently $4.01 on this strangle. So if I place this trade today, that's how much I could expect for it to bring in. The mark is going at $5, and the extrinsic value is $12,500 on these open options. The extrinsic rate of return percentage is 395%. P&L for the day, P&L open. It's got P&L open percentage, days open, days to expiration. There's earnings at the end of the month. The POP is the probability of profit. It's sitting at 90% on the put, 76% on the call. The out of money percentage on the put is 88%, on the call at 76%. So obviously you get to 100, it's going to be 12% on the other side and 25% on the other side. The capital requirement for this trade this little snowband over here with the line in the middle, that is your theta. So right now, this position, all things remaining equal, the IV remaining equal, the price remaining the exact same, is basically moving from the extrinsic value over to the net liquidation value to the tune of $491 per day. And then here we have the position net delta, which is negative 23%. So when you're short delta, if the stock goes up, that's not good for you. If the stock goes down, that's good for you. And then this gives you the delta collectively and the position, and then the profit and loss year to date. If I wanted to close everything out the way it stands right now, I would be down $1,850 on Robinhood for the year. So that is what's going on with Robinhood. So I feel very, very comfortable here at 80 and 120. The delta is 8 on the put, 31 on the call. So it's right there. I feel pretty good about it. I'd say that if I had to put my own pop on it, it has it at 70% over here. I'd say I'd put it more at like 75 for me. I feel very, very confident with the way that this one's playing out. If I wanted to stay in it all the way to the duration, which I don't want to, because that's just not the tasty trade way. And I learned about a year ago that it's just not, the juice isn't worth the squeeze for me to have that type of tail risk at the end. I just feel like there's just easier ways to make money. On Enphase at 35 and 50, and you guys can kind of scan to the right. There's 12,400. I'm just going to go over the main bullet points. There's $12,400 of meat on the bone. That's the extrinsic value. Got a 65% probability of profit. The cap requirement for this trade was 30,000. All things remaining equal, there's $462 of theta going from the extrinsic over to the net liquidation side of the house, and up $3,400 year to date on Enphase, and we've got positive delta there. So we're long delta. So if Enphase goes up, that's good for us. If Enphase goes down, we're going to feel a little bit more pressure there. And the reason being is because the delta on the short put is higher than the delta on the short call. So I'm really trying to show you how to read the scoreboard, because sometimes Tasty Trade looks a little bit confusing. But whenever I'm doing this with my wife, I'm like, baby, just slow down. In this country, we read from the left to the right, and just process everything as you see it versus looking at all the numbers on the screen and be like, oh, this is too much. I like Hood. I like the Robinhood app. It just shows me my percentages all real pretty, and it's great, but it doesn't give you any pertinent information. Yeah. So here it's giving you all the gauges, and you're like on Hood, I was happy that the plane was in the air. Here it's showing me all the gauges as to why the plane is in the air, if that makes sense. So this is just next level flying, and I know there's a pilot on the Rensing's a pilot. So I was just kind of doing that analogy for Rensing, because he's a pilot and he needs all those fucking gauges to keep the shit going. So you'll appreciate how important these gauges are. And then we got SoFi, 25 contracts. August the 15th is the expiration date. That's 29 days from now. We're sitting at 18 and 25, 18 on the short put, 25 on the short call. There's $2,500 of meat on the bone. Feel really, really good about it. Cap requirement was $8,000. There's a 68% pop, collecting, a C note on a daily basis as far as theta. Still down collectively on SoFi, because whenever we started the Tasty Trade journey on my son's account, I bought a bunch of leaps on SoFi, and that didn't work out. In retrospect, that would have worked out very, very well. But I still was convinced that it wasn't a good trade at the time.
Yeah.
So, and I talked about it. I was like, I think this trade will work out, but it still doesn't make it a good trade, if that makes sense. Like, I've never judged my results and be like, oh, I did good. No, sometimes you just got to admit you got lucky. And if I'd have just stayed in that SoFi trade, this account would probably already be close to 100, first of all. But so what I look at, what's the big picture stuff that I look at here? I look at my buying power percentage. It's very, very healthy at 58%, the buying power usage. But the number that I'm really looking at all the time is my extrinsic value, the 27,000. What does that mean? I look at my days to expiration, 29 days. All things, if everything expires out of that money, that extrinsic value is going to find its way over to the net liquidation value. The net liquidation value right now in this account is about 82,000. So if I rode all of this out to expiration, that 27,000 would move over to the net liquidation value, and I'd be sitting at about $105,000 of net lick if everything expired out of the money. And I was willing to roll the dice, if you will, because whenever you go to an expiration date, it kind of does become a little bit of a dice. So that's the way I read the scoreboard there. I'm going to go over this way. Our options, is there anything that you'd like to add there? Is there other metrics that you look at that stand out to you whenever you see this?
No, everything's great. The only thing is when you were speaking on like how you can have like the negative delta and the positive delta, which makes it great, because what that should tell you is that you can set your position up based off of how you view the market. So if you wanted to be short, you can set that strangle up to be short. If you wanted to be long, you can set it up to be long as well as delta neutral. So it just depends on what, you know.
But delta neutral for me is if you have a net position delta of less than 20, you're pretty delta neutral. Again, that's just me. Like, this is my own parameter. I don't know what Google has to say about it. How do you feel about that? Whenever I see a position here,
I mean, a delta neutral position is something like if you're going to sell the 20 delta on both sides, right? You know, you're delta neutral, but you know that's going to move. So if you on the low end, that's pretty much delta neutral as well. You know, something like
they're dynamic deltas, right? So you know that they change with every price.
But if you look at, say, for instance, M phase at a 0.08, that's like delta neutral, right?
Big time. Yeah.
You know, 14 delta neutral, long as it's not sitting at like 30 and 40 and 50. And
well, that hood one's not really delta neutral anymore. 23, and then we're short delta. So obviously there's a lot of pressure to the upside on this trend. Is really what you got to look at. So at some point you got to look at, can the portfolio handle the adjustment of going from 80 to 85? That brings on another level of risk, right? This is where your buying power and all of those things are very, very critical. Or would the portfolio like it better if I just rolled the entire thing out to the 65-day cycle eventually and stayed at 80, but maybe increase to 120 to 125, 130, and I could go grab the delta neutrality that way, if that makes sense.
I mean, it's pretty fine. I mean, that 30 delta is just saying like you're selling a 30 delta, so you still have a 70% chance of, you know, being successful. Now, the only thing is if you look at that 8, it's just not bringing in as much. It's not going to bring you that much.
It's not helping you. But the thing is, if I just try to roll this
go to the trade table.
Yeah, but 1 second. If I just try to roll this up, guys, it might not let me because the portfolio is so small and it would be utilizing a lot of buying power. You'll get these flags called concentration risk. So I'll try. I just want to look at it and see if it gives me that. I'm surprised that it doesn't, actually.
No. But see, look, and then, I mean, going from there to there, you will probably have to at least come to the 20 or to the 90 or 95 one, because that's going to cut your delta.
I don't know what I did. Hold on. Let me go this way. Yeah, so if I wanted to fix it now, like if I'm just like stubborn and I want to stay on this expiration date and I'm just going to keep like, you know, adjusting the goalpost and get there, because that's something that you can do. You know, I think the move to make right now, if I wanted to make a move, it would be just simply go from like 80 to 90. But I feel like it's going to trigger it, dude. I just feel like it's going to watch. I'm real surprised.
Because you remember your delta, your deltas are so low that it's going to just help you out a little bit more.
Actually,
I mean,
this isn't a horrible play right here. Hold on. Let me go ahead and do that. I wasn't expecting that. We'll see. I'm going to let it cook. And
then by doing that, now you'll probably bring your deltas down to like 11.
Yeah, it'll be a lot more neutral, right? It'll be a lot more neutral. So we'll see. I'm gonna let it cook. You know, whenever I do these and I'm kind of like indifferent, I fight for the money.
Then I mean, you know, you're gonna add on and pull out your what's the name? Go to your, what is it, the option chain?
Oh, this guy right here.
I forgot exactly how much credit you was going to take in, but you're going to add on another. What? How much? I forgot how much it was per contract, but
yes, that's right here. So here I'll hit replace order.
So you're gonna pick up like say another $1.65 per contract.
Yeah.
So that's perfect. You know, that'd be perfect.
Yeah, it's just not doing it.
Yeah, just let it work. But yeah, when you and then now it looks like you tight. It looked like it's just okay, you're getting too close. But around that 21 days, like we were speaking, when you roll it out to the next cycle, you're gonna pick up a credit and then you can expand it based off with the other credits you had.
Absolutely.
You know, and you back to where you originally started, right? But you wider this time.
All right.
You just let, you know.
So what do you think about this end phase one? I just put this one on again, dude, and I'm already up $1,250. 9% collectively, 1% on the put. The call's been doing great for us. I mean, this is a nice little performer so far and haven't had to do much. I felt real good about it at 35 and 50.
I would get out of there, by the time before earnings, though, the 22nd.
Yeah, when is that?
That's you got enough time, though. You got enough time.
It's next Tuesday, I think.
Yeah, but I probably Monday I'd probably get out of there, or why go out into the next cycle, or take it off for a profit, wait till earnings is over, then put another one back. However you choose.
Oh, here we go.
Oh, it failed.
Yeah.
Okay. Now you look at you had like a 12 delta, so that's perfect. You picked up 19.
Now we're in business. Yeah, I'll probably take this end phase. I'll take it off before.
And then wait till after earnings and then
but there's two reasons. One is yes, I don't want to mess with end phase during earnings, so they're going to talk about the big beautiful bill potentially and all of those things, right?
Okay.
But also is because this cap requirement, this buying power is so precious because I do have a strangle that is under pressure on the call side.
Gotcha.
Right. So your buying power is so sacred, dude. I cannot emphasize that enough. Whenever you want to sell short strangles, you have to be very, very cognizant of your buying power.
Yeah.
So like if I take this thing off right now and just say I'm going to book a row because it'll be a very easy win, and I go and I give them back, just more money just to be done with it. You see how it increases my buying power by 17,000. So it's like now I can handle any adjustments I need to make on Robinhood. And this is just another way to just manufacture the win.
Yeah. And I mean, it's also size as well. If you wanted to stay in, you could drop it down to 10 contracts and roll it out, Right.
Yeah, I could drop it down to 25.
Or whatever, So.
Yeah, if I just want to stay in it because it is a nice, it's a nice one. And then also the data is pretty substantial at $464 a day. So if I can stay in this thing another couple 2 or 3 days, that's an extra grand, all things remaining equal. And for an account this size, that's huge.
Yeah, when you find good ones like that, it's kind of hard to just throw them to the sideline, because you're getting paid to be in phase right now.
Big time. Look at the IV rank, 69.4. It's crazy.
You get paid to get in there.
Yeah.
And the buying power is much cheaper. Like go to the trade table on Enphase. If you just go to the 65-day, just to come out of there and just sell at 35, the CERC 35 put. It's only costing you $357 in buying power. And you getting,
it's crazy.
$2 and some change. Like,
well, I mean, just looking at it this way, though, option. I mean, just looking at it and be like, hey, if I want to stay in this thing, I could look at just rolling this whole thing out to the 64-day, and I can even just give myself more room to the upside because the big risk is always to the upside, right, on a short strangle, and that looks pretty good. Bringing in another $5,100, chilling, and reducing my buying power by a whopping 100. You know what I mean? And I just I'm outside of the expected move.
Yeah, you can even go to 60.
Yeah, if I want to. Yeah,
but 60 won't hurt you. You still pick. You see what I'm saying? So you could pick up another $5 and only put back 40-something cents.
Yeah, and I can always if Enphase goes down, I can always
roll that. There you go. I mean, it's at 35. Shit, I'll be mad. I'll be dunking all on it.
That's interesting. That's interesting.
And remember, you still picked up credits from your other roles. So it's like, I mean, I would be out around about 60. Yeah, around about 60 and let it be. Then we'll just, I go with you from there because I don't think it's going to move like that.
Yeah, I think I'm just going to leave. I just want to go here just to be a little more conservative, though. Dude, I like that right there. Dude, I'm picking up $5,200. Then, dude, I ain't even thinking about it. It'll cook. Give it time to cook. And Faith isn't one of those super liquid options where it just where like you're dealing with Robinhood or SoFi or one of these crackhead stocks that's got a junkie on every street corner like Skid Row.
Yeah, that ain't bad right there.
And Faith take a little time, but I'm just trying to eliminate, or not eliminate, but I'm trying to reduce the upside risk because at some point I feel like this thing will catch a bid. And I'll feel a lot more comfortable because I want to be in this trade for a while. Like I'd feel more comfortable when this thing's looking at like $75 or whatever, right on the call side. So yeah, I'm just gonna let it cook. Let's go to the featured account and go from there. So I have a cash grab that I put on during the channel last week. This gentleman joined. I think Ryan.
Come up out of that, bro. You up 30%.
Bro, I was at 10,000. I'm good, but I'm good here. I ain't doing nothing here, not yet. But I was at like 10,000 this morning.
You was?
Yeah. Oh. So my goal, but the thing is, I've actually finally started doing research on Oscar. So it's not going to scare me out of this position. At 1250, I'm actually interested in a swing trade for the shares at 1250. Oscar growing a mile a minute, dude. It's artificial intelligence for healthcare. It is kind of like like SoFi is supposed to do this one-stop shop for your banking. Mm-hmm. This thing's kind of trying to become. That's funny. This thing's like kind of doing something similar for healthcare. And it's growing a mile a minute, dude. Like they got some crazy growth. So there's that. I'm not doing anything with that one yet. Hood. I'm at 85 and 120. If I pull up the order chain, you guys will. Can you walk them through this order chain right here? Option.
Yeah, those are just pretty much your rows where you see the average trade price, and then you see where it say your mark. Your mark is where it's at. Your average trade price is the amount of credits and how much you're up. Click unclick the close though, so we can see where it say close. Yeah. So, all right. So that just in case. So what you see is from 7-1, those rows, those green, the green values all the way up was just rolls that he took in more credits.
Yeah.
So by it, and this is how you really be able to see where your position stand. If you look at Hood from the other standpoint, it shows that he's down. But when you get under the hood, that really tells you where you at. Right. Because the platform only can read it but one way. It can't read all your rows. It just takes what's right there. So you come under your hood, and this really lets you know where you stand.
Yeah. So the way I look at it is I start from the bottom. Right. So on the bottom, I started this journey on 7-1, mm-hmm. and I started at 70 and 120. And I started with 100 contracts. And then I was like, well, I guess I like it because I did 150 more. Right. Mm-hmm. And then I was like, I like it some more, did another 26, then did another 224. And that's how you got to the 500. Right. Yeah. But then I rolled. I went from 70 to 80. This was yesterday, I think, or 2 days ago. I went from 70 to 80 because Hood started going up. And then today I went from 80 to 85, and that's where we stand now, right?
Yeah.
That's where we stand now. So that shows you how I managed to trade. So the Tasty Trade Way and option can help me out here. The Tasty Trade Way is to One second. I always know when members aren't watching me because they start texting me while I'm live. Just so you know. Right now. And then he'll be like, "Oh, my bad." I'm not pointing any, not calling anybody out. Okay. So anyway, that's the game. You know, it's like you manage the untested side. You want to talk to them about that logic option?
Yeah, I mean, you manage the untested side if you are being tested, right? And there's ways to do that, right? You can be aggressive. You can wait until it hits your break even. You can wait until it hits your strike. It just depends on, your method and how you choose to do it. But managing the untested side allows for you to, if you're being tested on one side, then that means your other deltas are decreasing and they're not really helping you. So what you do is you can smoothen out your P&L by rolling that put or call up or down to pick up more deltas, and that will allow for you to smoothen out your P&L. But the other theory behind that is it also allows for you to be able to use those credits that you've taken in. And if you continue to be tested, it allows for you to restructure the whole strangle or whatever strategy you're using to your original position. So if you started off with $5 per contract and you got $15 in credit, you can use that other $10 to reposition yourself and structure your strangle to still, try to get that $5 that you originally started off trying to get. Absolutely. But if you got to do that at that point, you're defending. It's all about defending at that point.
Absolutely. So let's move on to another one. Let's move on to Palantir, and I want to show y'all why I feel strangles are superior to why short strangles are superior to covered strangles. For me, again, this is just for me. So Hood is just on another, or I'm sorry, well, Hood is also, but Palantir is just on another rager, right? This thing's like the raging boner that don't go away. This is like the person who took Viagra and it's like, hey, if the boner persists for 4 hours, call the doctor. I'm like, I'm calling a friend. You know what I mean? But this is the 4-hour boner, right? This is where you have a hard-on too long. You're going to go blind. The comedy's extra, guys. Don't forget to put money in the tip jar. But seriously, like Palantir is just going parabolic again. The market don't care about valuation. They don't care about PE ratios until they do. They don't care about any of that stuff right now. Mm-hmm. They don't care. They don't care. So this thing's going up and to the right. So whenever you own your precious little shares, you're like, oh my God, like Kevin Hart, right? Oh my God, they can take my shares. Oh my God, right? Whenever you're in a short strangle, the only thing I look at is like, okay, I'm 130 on the put, 155 on the call. I don't really have to do anything right now, but if I want to take some pressure off, what can I do? What can I do? I can roll the put up, get credits that way. I don't want to do that. Why? Because then now I'm not comfortable on the put right now. Other thing I could do is I've got a shitload of credits here already because they go to the order chain, right? Mm-hmm. And it says here we got a lot of credits. Yes or no?
Got $27. Yeah, $27. Yeah,
pretty decent, right?
Correct.
On 250. So one thing I could do is be like, hey, here's some of these credits back. Here's some of these credits back. I want to just be over here at 160. Like here's $53,000 back just to move the goalpost, and I don't even care no more. You know what I mean? Like let Palantir go do retarded Palantir things, right? Because this thing's insane. That's one option. Another option is keep them together. This is the tasty trade way. Keep it together and roll over here to the next cycle. And now make some modifications because now, contract consists of time and money, right? Mm-hmm. So now you're like, okay, well, you see this implied move, pretty big. So why not like go over here to just feel better about life?
Shit, you could keep on.
And then you're done, and you don't have to do anything. You know what I mean? You don't have to do anything. You're gonna bring up a shitload of credits, and you're gonna feel more at ease, if that makes sense.
What did it be at the 180?
And there's no credits over there. You know me, I'm a credit junkie, so I can't do that. So if I still want to get credits, I could go 130, 170, a little bit of credit. We're just adding time, and you're like, this is just a data collection situation. I don't like the stress. I don't like the pressure. Again, this is individual for everybody, right? It's going to be unique to you. And what is that noise? Oh, I'm sorry. I got a construction project in the backyard. They're building our wrought iron fence, and they must be doing something with the welder or the. It sounds like a grinder. I'm not real sure what that is. So anyway, that humming sound, if y'all can hear it, that's what that is. So that's one option right there, is I could do that, or I could just be more aggressive with the put and go get the credits that way.
I mean, if in me, I would say I would stay at the 130. I come to the expected move. Right, keep it there, keep that there. I will come to the 180. Right, come down to the 180. Yeah, I'm out of the way, but I'm only giving back $2 of the 27 that I already have.
I get you. Hear me out though. So clear that. So there's that ideology, right? So to me, I'd rather just do this then. I'd rather just roll this strike up and not have to go far out in time and go from a 52 delta to say a 39 delta. Well, I'm giving back more though.
But that's what I'm saying.
Here I'm giving the same thing.
But you're only getting a $5 move though.
Right. No, I get you. So those are where you have to just like figure out like who you are in the market and how much you can handle. Now, so let's talk about gimmies and gotchas. It's still in the sweet spot. It just doesn't feel good. That's the reality. The second thing is there is no like, oh, I'm going to get a notification from Tasty Trade saying, hey, you've been assigned because it's below my strike price. Mm-hmm. So it's not like be like, hey, you got to go make good on 25,000 shares of Palantir at $155. We're not in that situation.
No.
But this is also where you got to go look at your buying power. Hey, can I afford this, right? Because we're talking about 25,000 shares. So I'm like, okay, well, there's 19 million in cash. What's the buying power? 7.3. So now I got to go look at my little trusty rusty calculator. And I got to go 25,000 shares of Palantir at 155. Just to like, I want to cover, right? Because I don't want the pressure. That's $3.875 million in cash. Mm-hmm. So I'm in a situation where I could do another thing that would be very, very unconventional. And I could just buy 25,000 shares of Tasty Trade right now and be done with it. And wait for the 29-day cycle to come around and be praying to God that they take those shares. You see how the attitude's a lot different because you just forked out $3.8 million for your damn shares because you just wanted to eliminate any and all risks to the upside. That's an option. Definitely not one that I would utilize, but it is an option. Another option that you could use is you could start buying some calls and you could turn this into a call credit spread and turn it into a defined risk strategy. I just want to go over the exercises and the things that you could do whenever you're in this situation. What else would you be able to throw at this thing option? You know, is there any type of jade lizard, zebra, abracadabra? What else would you be able to do in this situation?
I mean, you can throw it at it, but it's just going to cost you too much because you're right there. You're at the 153. Right. So even if you bought the shares, you have to buy so many shares because you ain't getting but a $2 move up from, 155. I mean, from 153 or 154 to 155. And because, you got to cap those shares. I mean, with the
So like to me, buying the shares, it would have made more sense if I had made that decision when Palantir was at like 135.
Yeah, exactly. Because now you get that $20 move up. You see what I'm saying? Because you're going to cap that anyway.
This is something that I really wanted. I was hoping you were going to say that. I am not going to cover a position unless I made the decision to cover whenever it was closer to my put versus my call. I'm not going to do it. If I wasn't willing to cover it because it was there, I wasn't willing to cover it at 130. Why am I going to go cover it at 153 when I could just keep rolling and rolling and rolling? And then you're not dealing with all this. Oh my God, this dead money. Oh my God, I got all these shares. Oh my God, I'm not collecting premium on it. Oh my God, you're not Kevin Harting yourself to death anymore because you're just going to roll and manage, expand, contract, whatever the case calls for. And then eventually you're just hoping for a consolidation. Eventually we're just hoping for two things, consolidation and IV contraction, because at some point we're going to be on the other side of earnings, right? Option.
Exactly.
And then we're going to play for that IV to come down a little bit. And that can be our payday.
That's your payday.
I'm just trying to show them everything and take my time because I feel like I go through this stuff really quickly at times. Yeah. And I just want to make sure that I'm giving y'all all of the aspects of all the crazy shit that goes on in my brain whenever I'm looking at these positions. But the other thing that I wanted to point out is there's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. There's 15 short strangles on. And I'll put them all on there for you. They're all short strangles. I ain't lying to you. They're all short strangles. And look at the P&L for the day, 29,000. Y'all remember the days? I hit SoFi, 10,000 shares of Amazon. And remember those days? Bro, that's what I'm saying. That is what created this evolution for me, is I was so sick and tired of the portfolio fluctuating so much on a regular. And I was like, dude, why don't I just do the ultimate premium data collection strategy? And that's how I landed on short strangles for myself. So then now I want to talk about the tweak that's coming. Because it's all about delta neutrality whenever you're selling short strangles, right? Option. So how do you create delta neutrality? Because you have this thing called equidistant. You want to talk about equidistant real quick, Option? And we're going to use PLTR as the guinea pig.
Equal distance,
right? So it's equal distance from your strikes to the current share price. But a lot of times, more often than not, when you go equidistant, you don't have the same deltas.
No,
because there's positive call skew, and sometimes there's negative call skew, right?
Correct.
Or whatever you want. There's put skew and then there's call skew.
Correct.
So the market's basically giving you the direction that
they feel risk is
on, right?
Yeah, where risk is.
Right. So let's look at Palantir. So this little dot over here at 153 and some change, 153.65. That is the current share price, right? So we go equidistant. Let's just say 140 and 135.
Go to the 135. What's that?
135 is the 22 delta.
That's 20 points up, 20 points down.
And then we're gonna go what, 175?
20 points up.
See, so you got 28 delta. So you see how that is not, there's more, in other words, the calls are worth more than the puts. If that makes sense.
But in that instance, they pretty even, right? Because you getting $4 and some change there, and you getting $4 and some change.
This isn't a good example. I'm going to show you all a good example. Right? So look at this. Look at this. It's trading at 320. So we're 70 points away over here. And then on the call, let me pull it up.
Let's do one even better. Go to Netflix because they got earnings today.
But well, hold on one second, just because I'm already here. So the delta on my short put for Tesla is 23 negative. Y'all see that? Right here. And then if you look at 500, it's 31.
Yeah.
So it's way the hell, it's far away, right? We're talking about 180 points away on the call. and we're only 70 points away on the put, but yet the call has more delta. So this is where I created these little ratios for me, where I'm like, okay, if I want to maintain delta neutrality or delta neutral position, instead of playing with the strikes, because I'm comfortable where I'm at, but then I could just consider selling more puts, and that would give me the weighted delta on the put side versus the same weighted delta on the call side, if that makes sense. So I'm very tempted on a pullback, not right now, but if Tesla were to pull back to like 300, I'm going to be very, very tempted to add another 100 contracts just on the puts alone. That way the position is more balanced that way versus me constantly messing with the strike prices, if that makes sense.
And I mean,
to answer Hugo Snowball's question from earlier, because that's how I got there. And right now I don't have that on any of these positions, except a little bit on SoFi, but not even so much. I have 5,000 puts, and then now I already have 5,000 calls. So because at some point I only had 3,000 on the call side, but now I'm good. I'm just absolutely convinced that this was going to work out, and there's plenty of buying power, and I'm okay just following the puts up to 20, 21, 22, 23. Like I'll keep doing it, and I'll keep rolling this thing out, and eventually we're going to be in June, and we're going to be on the other side of the performance bonuses and all that stuff. And this position, I feel like, is just going to print and not causing me a lot of stress. Anyway, option, you were saying?
No, I was saying if you wanted to see what the call skew was, the best one would be like Netflix because they got earnings today.
Okay, so let's look at Netflix. So let's just go the 29 days?
Yeah, you go to the 29 day.
Okay, so let's look at it.
And let's say you go about come at the 1260, just go about 200 points down. So what that'll be around about 1160.
Let's just
go to 1160.
Yeah,
go to 1160. And then go up to
21 delta,
and go up to like 1360.
1360.
And then you can see the difference. Now, that's the call skew. You see the difference in the prices. So
$6.
It's $22 there, but the put side is 16. So that's just telling you that the risk is more so seen to the upside, and that's being equidistant, right?
Yeah.
Because you 200 points up, 200 points down, and you see what they're selling for.
100 points down.
I mean, 100. Yeah, 100.
100 point down is 21 delta negative, and then over here you have positive delta at 27. So there's a 6 point spread.
And then the difference in the price. The difference in the price kind of tells you. You got $22 on one side and $16 and some change on the other. So the market is kind of saying that, the risk is to the upside.
Or the momentum is to the upside. Like the people are betting on an upside move. Interesting. Yeah, I've never messed with Netflix. It's one of those stocks that I just missed it, and it is what it is.
Yeah.
A lot of people made a lot of money. And I feel like here lately, my wife and I watch a lot of Netflix. I feel like I should just start getting interested in Netflix, but I'm just not. Another one. This is a steady Eddie. They don't all have to be crazy stocks. This is a new position. This is Apple. I've just been in this for 6 days now, already up 18,000. I did the 195 put, the 230 call. So I pull up the ordered chain. There's not a whole lot to see. I started with 100 contracts. I added 150, then I added 250, and this is where we landed, right?
Correct.
So I've taken in some pretty decent credits, right? What does that show? 360? Is that where you get that option? Or
yeah, that's $3.60. Yeah, per contract though.
Times 500 contracts. Yeah. That's why the extrinsic value is 154,000.
Correct. Or per that contract is 90,500 plus what you already took in.
Well, that's on the put and then the call. So the collective is
correct.
Yeah. So that's how you get to the 154,000. So I feel like it's pretty balanced, I feel like it's pretty balanced, 17 and 15.
That's
pretty tight. That's pretty tight. And I feel like it's on easy street. The deltas are not too wacky, if you will. 17 and 15, a pretty high probability of profit. I think that this is probably the best trade on the books right now. What do you think, Option?
Yeah.
I mean, as far as like craziness and all things considered, I feel like this, if there is one, and granted, there's earnings coming up, right?
Yeah.
But that's also going to put me there at the 21-day cycle to where I can just log in a win of hopefully 25, 30% if I want. Or I can roll to the next cycle or take it off, get the answers to the test, and then still have a pretty high IV, right? Because the IV
that one's kind of low though. 25.
Yeah, I'm hoping it goes up a little bit at some point.
No. We ain't hoping that.
No. But I'm saying I'm hoping to get out of it, and then
it go. Got you. Okay.
Yeah, and then I get back into it, right?
Yeah, definitely.
Yeah, because right now you're not really getting paid for the risk, is what I'm saying. This is stuff that I've learned from option, right? Because the very first thing I look at every day when I put these on is like my IV rank. I didn't look at that before. I did it. And now I'm like, man, this one, man, why can't they all be like this? You know what I'm saying?
Yeah.
Freaky deaky, baby. Like, why can't they all be like freaky deaky end phase over there? You know what I mean?
Damn right.
Another one that I put on option
for a stock that price and you getting paid for it, like that's just heaven, man.
It's exciting. Look at it. Look at this UNH. Now I like that IV rank over there. That's exciting to me. I did this one, sold this one yesterday and then some today. So 100 contracts. I did the 250 and the 400. This is a stock that's fallen from grace for a multitude of reasons. Potential fraud. They had, I'm not sure if it was the CEO. Somebody got killed in broad daylight in New York at a municipal shit show over there on United Health. But I feel like there's a legit opportunity there. I'm super excited potentially to even own the shares as they swing trade at 250. That is why I picked that strike price. And then I wanted to be way out of the money at 400 because it wasn't that long ago that the thing had a 5 in front of it.
Exactly.
So I want to make sure that I'm wide enough so that it's easier to manage if I need to manage to the upside. I can be real greedy and put it at like 350 and get more credits, but I'm like, what would be the point if it starts catching a bid? I'm just gonna have to be managing that shit and creating the headache. I'd rather just start wide so I can stay wide or maybe even contract if things really start. Because there's going to be another earnings report. We're going to have answers to the test here towards the end of the month.
Perfect could be you on the 29th. You know earnings and you just get a small move. You're gonna pick up the contraction of that volatility because that 50 is probably gonna go to like 25, 30, you know, and then shit. At that point, you know, you'd be way profitable.
But that's another trade that I feel real good about, dude. I just feel like the setup was like a B plus. It was a good setup. I felt like it was a good situation here at 250. I mean, mommy, may I? You know what I'm saying? Like, bro, like I've studied this company enough over the last month or so. Shout out to Vincent, one of my super OGs on the channel. He's in this play, not this exact strangle, but he's in this stock, and it's just pointing out how they make billions of dollars, but their market cap's less than Palantir's, and it was just no brainer shit. The more he kept talking about it. So you know you learn from people if you're willing to listen, right?
Yeah, absolutely.
And then Amazon. These are the last two that I want to talk about. Actually, one more that I want to talk about. This is an absolute zero conviction stock from interest, if that makes sense. I'm just not interested in it. But there was an opportunity there, and there's a very trusted source that covers this stock on a regular basis named Tevis.
Okay.
I consider Tevis a friend. This is a guy that I could talk to. Fucker won't answer my phone all the time, but he'll get back with me. You know what I mean? He's busy, but he will get back with me, and I could get the skinny on him. So he's like, hey, this is legit. I'm putting a substantial amount of my net worth in this thing. So this is essentially Tevis's trade, right? If you will. So, and he's probably playing it differently, but this is the way I'm playing it. But it's his ticker. Like he's covering it. Crossroads is kind of excited about it. There's several.
I mean, it's a good play on it. I mean, I wanted to, but I don't know.
Bro, I'm just trying to get to 50 grand.
Yeah.
I'm just trying to get to 50 grand and I'm outies, bro. That's it. I'm just trying to get to 50. So I'm literally being greedy right now because I should take this trade off. Because there's no there's no interest. It's like Rocket Labs, bro. I made a shitload of money on Rocket Labs, and you ain't gonna get me to listen to Sir Beck or whatever the fuck his name is. I don't care. Yeah. No, not interested. I'm just not interested in space. I'm not interested. I'm just not.
Yeah.
If it's important, if y'all need these little satellites up there because I want my phone to work or whatever the hell they do up there, I think it's important. I don't need to be interested in it though. Mm-hmm. It's just like, I'm not that interested in SpaceX either, bro. I ain't trying to go to Mars. I'm good right here where I'm at, bro. I'm good. What are you going to do up there? There ain't shit over there. I mean, what are you going to do over there? Like, I mean, I just don't understand that. There's so many beautiful places on this earth that I have yet to visit. And I'm like, I got a lot of work to do down here. Let me know what it's like over there. There ain't going to be shit to do. Y'all are all going to be bored. Y'all going to be killing each other trying to get on the spaceship and come back down over here where it's fun. Get out of here with your crazy shit. Y'all been taking these Star Wars movies way too seriously. Yeah. So, anyway, so Hans is another one that I'm just trying to
What is his position on earnings? What did he think about earnings?
I don't know. Dude, I haven't even reached out to him. I just know that they had an issue because Novo Nordic, I'm not sure if I'm saying it right. There was an issue because they got accused of some shady stuff. So then the CEO defends their position.
Okay.
And there hasn't been any lawsuits. Again, I don't follow the story that closely, right?
Okay.
But it might end up being a bit of a nothing burger, if you will. And then I know that the short interest on this stock had been pretty high. So a lot of people were playing it for a squeeze option.
Yeah.
I'm not into that shit. I just needed to stay in between my goalposts. I feel like my goalposts are pretty wide. But that being said, due to lack of interest and familiarity, I'm just happy that I got the win, already. Yeah. But I'm just trying to milk the win a little bit more. This is the element of greed that you got to deal with, right? I'm showing it to y'all right here.
So look, I was looking at a trade on it, just a thought, right? Because you're really not getting paid for that, right?
Well, 51% IV is what it says.
Yeah, but the way that you're not. Let's put it like this. That go to the trade table, your implied volatility isn't getting paid for how the stock is moving, so to say. That's that thing. It's high. Yes.
Look how big that copper strip is, though, right? For only 20 days out, that's pretty wide.
Now it's you perfect, but I would play it more, like I'll be directional, me personally, and something quick would be for me to do, say for instance, a poor man covered call, but a diagonal. So I will buy that 50, and I'm gonna probably do this. Buy that 50 call right there for me. And then buy that, and then minimize the trade table and go to the 15-day and sell the 60 call. Sell the 60 call. So that's a $10 wide. You paying $5.50. Go to your curve. Go to the curve. Because I would just be more directional. Hit analysis. All right, come to analysis on your on this side. Open it, go to analysis there. Unclick the top one. All right here. No, unclick the box.
This one?
And then click those two. Click those two first boxes, the August 1st and the August 15th trade. And that would be me being directional. You see what I'm saying?
Yeah.
No risk to the upside, 5, it's a debit, but I will play that for a max profit of 4 and some change if it was to go up. So that's just an idea for somebody who is probably want to just do something in it.
Yeah. What I'm looking to do is collect $3,500 a day, a couple, 2 or 3 more days, and I'm out.
Oh yeah, definitely.
Like, I'm out of there. Like, fuck that.
Definitely.
No, and then I look at it, I'm like, okay, there's $77,000 of meat on the boat. That's exciting. It's pretty wide, it's pretty safe, relatively speaking. You know, the deltas are 18 and 19, super delta neutral position. All that looks good, but this stock is a mover and a shaker. I mean, it's gone up like 20% plus a couple of times in one day that I've seen it, right?
Yeah.
And I just don't want to be caught. I just don't want to be caught in that storm. Now, it's exciting if the storm is to the downside because that's easy to manage for me. But what if this thing shoots up to 70 overnight? Now I'm like, okay, now I'm babysitting a trade that I didn't even
you're not getting paid for, and that's
and that I didn't even care to be in.
Yeah.
You know what I mean? Like I was just so that's where you still have to be careful with your cash grabbing because I have a little bit more interest in Oscar than I do Hims. You could argue that they're similar spaces. But for whatever reasons, I'm just more interested over here. And I've tried, dude. This kid Wong came in on the channel a couple, 2 or 3 years ago, and he was, you know, banging the table about Hims. And I was just like, this is how dumb I am in the space. I was like, I'd rather be in Teledoc. And that obviously was not, you know, that was like my little Kathy Wood moment right there. That probably wouldn't have worked out. Hims has ended up being a monster. I guess I'll just leave you out with this. Not every stock has to be for you.
Nah.
Like you gotta go, you know.
I just look for ways of how I can play it. So if it's like I don't care about nothing, but just like, okay, what type of trade that I can set up that'll give me a high probability?
Right.
Right.
I wish they could all be apples, bro, but then I wouldn't make that much money because I mean this is exciting, but dude, 500 contracts to make, you know what I'm saying? Like there's not a lot of money in Apple, and that's why I wanted that stability in the portfolio, like I was willing to sacrifice, like the amount of premiums I could get. Dude, imagine if I just juiced up this thing to 500. You know that this extrinsic row is so intoxicating option. It is so intoxicating because I'm like, well, I already know how much money it's going to take. It tells me right there. You know what I mean? And I'm like, dude, I could go grab $1 million in premium like that right now. But then it's just like,
it's time, right?
There's a huge move. There's a huge volatility expansion. That's gonna hurt a little bit.
Yeah. So that's why you got to be selective, man. I'm always making sure that I'm just playing for a contraction if I'm not directional, right? Yeah. That's just down to how you trade, though, right?
That's a mouthful right there. What you just said. When you're not directional, you're just playing the delta neutral strategy.
For a contraction.
You want to make sure there's enough juice in the lemon that's worth the squeeze, and you're playing for a contraction.
That's it, man. You know.
See, we missed anything here? What's going on, Rich? This gentleman right here, man, he always has really good commentary on our WhatsApp group. So I want to give a shout out to Rich. I don't need no stinking shares. How would you play possible synthetic on Palantir option?
A synthetic?
Hey, BR Baller wants to join. I haven't had him on the channel for a while. How do we add something here?
Let's look at Palantir synthetic. Okay.
Copy. Where's Space? What's going on here? Hold on. I'm trying to get this kid on. He'll come over here and tell us how he's gonna make millions on Lululemon. I think Lululemon's so BR Baller's new nickname is called the flavor of the week. He's the kid bringing the new girl home every week.
Yeah.
And this is the one, mom and dad. This is the one, mom and dad.
He got one for us. I know he did.
And I'm the dad that's like this. You know what's so special about this one, BR? You know what I'm saying? This is what you said about the last 10. You know. So we're gonna call him Flavor Flav. Y'all remember? I'm showing my age. Yeah, Flavor Flav, the MC for Public Enemy.
Yeah.
911 is a joke.
I know BR got one for us. I know he got a new one.
Hopefully, or anybody wants to join for that matter. I got another 15 minutes and I'm willing to shoot the shit with you guys. I haven't eaten today. I break my fast at 12 o'clock today. And, so I figured I'm in here.
I sent it to you, that S-Bet. It's sort of like PLTR, but they doing it with Ethereum. So I've been in that, and I'm liking that. I'm liking that.
Dude, Jesse Dow posted on X. Dude, this fool's made like $500,000 on that joint, dude.
I like that.
And then he posted, I like the stock, like Orange Kitty.
Yeah. I mean, if they do anything like how MSTR doing, because they're doing the same thing, they just using Ethereum.
Is this the one that Tom Lee's part of or no?
The guy, I sent it to you. The guy you be mentioning, Deal or something, Dow for SoFi. What's the
Anthony Noto or who?
No. Deal or something. I forgot his name. Dies. Peter something. Peter Deal.
Peter
Deal? Yeah. He also brought into it.
He's a co-founder of Palantir. He's part of the PayPal mafia, him and Elon Musk. And he's also a very early investor in Facebook.
Yeah, he put a lot of money on that S-Bet as well, and it's just been crazy.
He wrote a book, a really good read, dude. It's called 0 to 1.
0, okay.
0 to 1. Do the hard thing first.
Do the
hard thing first. 0 to 1. Good book. Did I highly recommend it? Highly recommend it.
Yeah, you talk about juiced up.
With a smaller account, I feel like I have to own a lot of shares in order to get the quickest growth to be able to have a large cash position at some point. I mean, I don't know what y'all consider a smaller. I don't know what y'all consider a small account. Our small account's about $83,000 net liquidation value right now, and I've got 3 short strangles on 0 shares.
You don't need the shares. You can do synthetics, man.
Math Ace. TJ, I love your channel. Question. Excuse me. How do you reconcile selling naked calls on stocks you have strong conviction will go up like Riot that can go up violently? Probably not an ideal candidate for short strangles. And if y'all notice on the book, I don't have any Bitcoin miners on there. The risk to the upside is just too big right now. The only thing that I could do on a Bitcoin miner right now is bite the bullet and buy calls, buy shares, or just sell boring ass cash secured puts or short puts. Because selling naked calls on Bitcoin miners when they can go up 30, 40, 50% in one day if they catch the right bid. Riot announces something with HPC AI, bro, you're asking for trouble. A short strangle is ideal for a stock that's going sideways. It doesn't have any upcoming catalyst, but for whatever reason still happens to have pretty high IP. Kind of like Enphase. That's why I keep saying, pounding the table, that Enphase is probably the best short strangle opportunity there is right now because the IV is really, really high. But what's the catalyst that's going to get this thing into triple digits anytime soon? Like during this administration is going to be very, very hard for Enphase. But yet the IB, you're getting paid for that risk.
Yeah.
Pretty awesome. What's going on, Stockman? What's going on, Jesse? Mr. Poto, Stockman, always trying to make that bacon. So they're just talking with each other too. Wheeling, Idaho. That's a good way, but this way, wouldn't it take way more buying power they're probably talking about something that we did. Have you covered SoFi yet? No. Anyone in the chat? No. Come in about 20 minutes and he hasn't mentioned it unless it was earlier. What's going on, trader? Trying to see if there's anything else. G had been back. They're out. I guess he's not on here anymore. VR baller. No, not yet. So I showed it earlier. Let me see if I can get back over here on my son's account. Let me see if I can get back over here on my son's account. Let me see if I can get back over here on my son's account. Let me see if I can get back over here on my son's account. Let me see if I can get back over here on my son's account. Let me see if I can get back over here on my son's account. Let me see if I can get back over here on my son's account. Let me see if I can get back over here on my son's account. Let me see if I can get back over here on my son's account. Let me see if I can get back over here on my son's account. Let me see if I can get back over here on my son's account. Let me see if I can get back over here on my son's account. Let me see if I can get back over here on my son's account. Let me see if I can get back over here on my son's account. Let me see if I can get back over here on my son's account. Let me see if I can get back over here on my son's account. Let me see if I can get back over here on my son's account. Let me see if I can get back over here on my son's account. Let me see if I can get back over here on my son's account. Let me see So show it on my son's account. Actually, hold on. Before I do that, I go over here. And let me see if I can actually go to my accounts. There's another way that I can show you on net liquidation value without showing all the damn account numbers. One second. Trading, manage my accounts, balances. Here we go. Here we go. Okay. Okay. What are you seeing over there, option?
Hold on, let me. I see your account, the accounts.
Then the black though, right? Okay.
No, like just it was regular, like it was the regular way.
Okay, yeah. So that means not sure why it's not showing it this way. Let me, God dang it. Yeah, I won't do it. God dang it. That's annoying as hell. Anyway, I can't get it to show that I had this other way of doing it. Oh, maybe, wait, hold on. Let me do this. So let me go present, stop screen, present, share screen. Let's see if there's a, no, God dang it. Let me see. Yeah, I just can't figure it out. That is really annoying. Anyway, yeah, I can't figure it out. Can't figure it out. So anyway, my son's account is like 20 or like 82,000 right now. I'm trying to get it to 100. So the way that I can do it this way though is, so it's like at 82. Well, I guess it's not going to show because I'm not presenting, right?
No, it's just black.
Okay, present, share screen. So here it is, 82, right? 82, you just look at the extrinsic value. The extrinsic value is, geez, where'd you go?
36. 36.7.
36. So in a perfect world, and then you look at the days to expiration, it's all 29 days out. Well, actually, I just rolled the end phase. So you have 15.9 on hood, expiring 29 days out. The extrinsic value, 2,600 on SoFi, and then there's $18,000 of extrinsic on end phase. So in a perfect world, if everything expired out of the money, that 36 would shoot over to the net liquidation value, and the account would be well over 100,000. So you can still get quite a bit of upside, guys, if you do short strangles. But again, you just got to know if it works for you. You know, like I'm not trying to hit everybody on the head with short strangles. It might not be for everybody. You know, in fact, I think it's probably not for a lot of people because I don't think y'all have the ability to keep your emotions in check. Because there's a lot of people that are newer to the market and they have the oh my God syndrome, right? Like if the stock goes up $5, oh my God, the stock goes down $5, oh my God. Like it's that Kevin Hart, oh my God, right? Like that's their thing. I need Alex to make me a little Kevin Hart thumbnail, right? With oh my God. I think the way that people look at every time they look at their portfolio. So
yeah. Hey, let's show that synthetic on the PLTR real quick. Because that's and like you said, you don't like to do strangles. These are, you don't have to buy the shares. You can do these if you like covered calls.
Okay, so let's go. Okay, what are you trying to do?
PLTR.
So here's balance already. Okay, go ahead.
Go to the trade table, and say for instance you wanted to just do a covered call synthetically. Go to the 64-day.
So you're gonna buy, put, sell, call, or buy, put, buy, sell.
So we know if you wanted to buy the shares right now, that's going to cost you 15 grand, right? For 100. If you sell that 155 put, you're going to take in $15. That's a synthetic covered call right there.
Because you're in the window. Because you're in the
Because if you go to the curve table, and I can show it and why we say that. All right, and click over to your pull out the dropout box over there.
This guy?
Go to and uncheck everything but the one that's the new trade. Right. So you see you can make what 1,500 and it sets up just like a covered call. Right. So that sets up just like a covered call. And your max profit is 1,500 and some change. Now, TJ, do the same thing, but buy 100 shares and sell the covered call. Sell the 155 call.
Okay, so
buy 100 shares and sell the 155 call. Hit the axe up there, way up at the top.
The what? Hold on.
Your axe. You see where the bid and the axe up there across the line where the PLTR, the IV rank, the axe, keep coming. The next one.
Yeah.
All right, click that and then sell the 155 call. Right there. And then now go to the curve view.
Yeah, but that's going to cost you 13 grand.
It's going, yeah, but it's going to cost you 13 grand there. But go to the curve view so I can show them the same thing. You're only going to make, if you look at bring your arrow all the way across to just come over to the other side.
Up there?
Come all the way over. Yeah, right there. You're only going to make $1,627 if the shares continue to go up. So,
but you're out 13 grand, where the other way you made 1,500.
And you're making the same profit. That's synthetic.
Yeah.
Now, some may say, well, you got to manage it and do this and do that. That's cool. It's nothing wrong. You got to manage. Think about it. If you got the 100 shares and that start dropping to your break even, you out of that 100. That's $100 you going down per dollar drop. But with your short put, you can just manage it. Roll it out, pick up more credit.
Yeah, and I think that's the thing. It's this right here. Like if you look at all this. That could be very intimidating for a lot of people. Whereas I'm just looking at it, I glance at it and I'm like, okay, I only got one in the money. Let me look at it. 64 days out, 40, 50, it's at 39, close it. I don't have shit to do. Move on to the next one, right?
Yeah.
And I just look at all of them. I'm like, in phase. What is it? What are we doing here, right? 40, 45, I ain't got shit to do. Move on to the next one. Over here in the money, TSOL, what do we got? 12, 14, 64 days out of the money. Nothing to do. Move on to the next one, right? Same shit, right? I look here, into money, nothing to do. My 20 account. In phase. What's going on with in phase? Always in the money in phase. 40, 50, 64 days out to 39, ain't got shit to do. Move on to the next one. And 47, son's account. Nothing to do. All out of the money. And I'm done. Let's go golf. You follow me? So I'm just saying, people might be exaggerating what it really takes to manage these things. So I can look at this shit real quick and look at it and be like, okay, it's at 1450, 1258, glance, 85, 120, 105, glance.
Yeah.
130, 155, ain't shit to do. 195, 230, 211, ain't shit to do. 4, 6, it's at 5, right in the fucking middle. 160, 200, 182, 40, 70, 50. 220, 250, 223, nothing. NVIDIA 145, 190, nothing to do at 173. It's way out of the money. Why am I? It's way out of the distance. Why am I even looking at it? PayPal, same thing. Tesla, same thing. You can go live life. Here's the issue.
But people.
Hold on one second, option. Here's the issue. This is the quote of a lifetime for you guys. This ain't a fucking video game, guys. You're not going to get paid more money for logging more hours looking at your portfolio. You don't get paid for hypnotizing your portfolio. This isn't a video game. This is your livelihood. Just structure it and relax. Manage it whenever it needs managing. If it doesn't need managing, I posted it on X the other day. The waiting is the hardest part. The Tom Petty song. The waiting is the hardest part because of apps like Robinhood. They have gamified trading and they make you feel like you got to push buttons to do something. Investing, even selling options. It's pretty passive. It's pretty passive, dude. Like, I manage these trades 21 days out.
Yeah.
And then I take it out 60 to the 64-day cycle, 65, whatever it's going to be. It's probably going to be like 55-day cycle when we do it next Friday, right? Wednesday, Thursday, Friday, whenever we really manage those 6 or 7 trades that are expiring here within the next month. And then after that, we don't have to reconvene again for another 25 to 30 days. That's the reality of what we do here.
Yeah.
But I go on 5, 10, 15 times during that time just to keep the show going, if you will. But if I really wanted to call it what it is, bro, I could just do this shit once or twice a month and give you all the same information that I'm giving you now. It's going to be a 3 or 4 hour show, though. Mm-hmm. But that's the only time that I'm really having to do anything with the portfolio. The rest of the time, we're just filling in the air, if you will. Because I feel like a lot of y'all have questions. So we play a game of Radio Shack. You got questions, we got answers.
Correct.
But dude, you seldom put 30, 45 days out, 60 days out. There's a lot of people that have decided, hey, the date is still pretty similar, even all the way to 90 days out. I have a business to run. I got vacationing. I got golfing. I got other shit I'd rather do. I'm going to deal with this shit 4 times a year. And then they're going to go tit for tat. They're going to be within 2 percentage points at the end of the year with all the shit that you did managing your shit 3 to 5 hours a day. Or 7 or 8 hours a day, listening to an every earnings call and doing it. It's just, you're turning it into a video game. You're turning it into your own Netflix series. And I'm not here for the drama. I'm here for the dollars.
Yeah.
I just watched Sullivan's Crossing. You want an awesome Netflix series going on? Sullivan's Crossing, season 3 is airing on CW. That is awesome. Tearjerker. It's got all the stuff in it. It's awesome. I recommend it. Sullivan's Crossing.
Okay.
But that's not what your portfolio is. Your portfolio is like, okay, well, am I hitting my numbers? Am I going to hit my numbers because I stare at the screen a little bit harder? What am I going to do? It's not a video game. Your portfolio is not a video game. But this is the video game. This is the video game generation, right? Mm. So y'all feel like you gotta be pushing numbers and pushing buttons and pushing buttons and pushing buttons, and that's just not what it is. That's not what it is. I'm sorry to disappoint you. That's just not what it is. Now, if you want to just like talk about stocks because you enjoy talking about stocks, there's people that have hundreds of thousands of followers, and all they do is talk about stocks. They don't push any buttons on their channel. And that's cool. That's not what we do here. We sell puts, we sell calls, we collect premium, we roll when it makes dollars and cents. And we make a lot of money. Don't have a lot of viewers because it turns out that people want to talk about stocks. They don't want to actually fucking make money with it, right? On a regular. That's not exciting to them. They want to know what the CEOs say. Who's Elon fucking? What's going on with Donald and Elon? That's what's exciting to people.
Yeah.
But I've been showing y'all steady for the last 3 months that the net lit goes up $1 million a month, and that ain't exciting to you. Well, you, my friend, are a fucking financial retard. Mm. You're looking for a Netflix show. That's not what this is.
Yeah.
I'm never going to be good at ratings, right? Because I'm telling you how it is. But dude, I'm selling puts, I sell calls, I collect premium, roll when it makes dollars and cents, buy the timely leap, and then now I'm also like doing shares as swing trades when there's like an opportunity there.
Yeah.
But other than that, that's it, dude. This isn't. I mean, it is designed to be a set and forget strategy, guys. Like I think people people seem to miss that point. This isn't about being glued to your television or to your computer on a regular basis. I mean, this is designed to where you can go out there and live life. You can open your portfolio 2 or 3 times a day, glance at it to see if there's anything that needs your attention. If not, take that attention, give it to your God, give it to your family, give it to your give it to the things that really need it, if that makes sense. Like staring at SoFi all day, I didn't influence SoFi being at a 52-week high right now. Because I just got a notification that's at a 52-week high. I'm like, okay, cool. I mean, it's exciting. Does that mean that I'm going to go like look at the portfolio and calculate all the millions that I'm up on SoFi? No, because I ain't planning on selling the shares today. Who gives a shit?
Yeah.
I mean, so I just don't. But again, this is just me being 100 with you guys.
I mean, I feel like, you just have a lot of people that's just directional, right?
Yeah.
And just being directional, meaning they like to just see profits when it's going straight up. That's what a lot of people kind of tend to, fall in, to just see something just stay neutral. It's like, oh, well, what if it does this and what if it does that? When if you just use the math, it's not really always going to do that.
Right.
You know what I'm saying?
Yeah.
So, but I got one more. I like to just show 2 different ways, because it'd be, I like to like just give people different views to look at things, so they don't be spending so much capital to get the same exposure. So let me just show one more position on how you can create the covered call and get the same exposure for less. If you can
pull something up or what?
Yeah, let's go back to PLT. I'm gonna just show another way where you can get this exposure and get the same amount of deltas as if you had 100 shares. So go to PLTR one more time.
Hold on, option. Account 20 is up $212. Let me see what's going on. Okay, I'm just kidding. Okay, go ahead.
Oh. Damn, you had me scared. I'm like, what happened? Where is that? All right, man,
Anyway, which one are we looking at?
Go to PLTR.
Okay.
We're gonna do PLTR again. This is kind of help that viewer. And go to the trade table. Now, go to the table, and then go to the 64-day.
Okay.
All right. Sell the 155 call and buy. Let's see. Let me look at mine so I can tell you exactly.
54 delta.
Buy the 130 call twice. Buy twice. And look.
Oh, but it only did this one once.
Oh yeah, turn that one back to 1.
I won't. I don't know what I'm let me.
All right, so just keep that there and hit the quantity. Don't keep it there. Just hit the quantity back 1. Right there. Come up with the arrows. Yep. Click that back 1. All right. So right there, if you look at your deltas right in the middle of the screen, right over top of the price, that's 101 deltas. That's 100 deltas. That's pure stock movement. You see what I'm saying? It's pure stock movement. It's going to cost you $45.10. So now you picked up 100 shares for way less than if you bought the shares. Now we could be a little bit more creative.
$4,500 only versus
45. Now we can be a little bit more creative with that. We got 100 deltas. Now let's say we want to just push edit. TJ. Let's say we want to sell calls against that. Minimize the 64-day.
Go to the
15-day. You could go to the 15-day. Come down to the 170. Go to the 170. And now you created a covered call. Go to the curve view. And the same thing over there up to pull out that drop down box over there on the right. Pull out where your pull your box out. And uncheck everything but the 3 that we uncheck the 250s, and boom, you just created and push that over, click that, you just created a covered call. So it's just so many more ways you can create those positions without spending so much more capital. And this is why we always make the statement that it's more capital efficient to do options and set them up synthetically in opposed to owning shares, because you can do the same thing and you sitting on 84 deltas right there, and you just continue to sell that call, roll. You can roll that position when it get close, roll that same zebra to the next expiration, and just keep doing the same process.
Oh, this is called the zebra.
So it's just like a covered call.
So why do they call it a zebra and not a kangaroo?
Because it's zero extrinsic back ratio. Because you washing away.
There's actually something that it means. Got it.
Yeah, you wash away all that extrinsic value, you dollar for dollar to the upside. So this is why I'm like, why would I own shares when I can do covered calls multiple different ways for less? No,
and again, so why own shares? It's a real good question, right? So
let me say I don't have no problem with it.
The reason that you can own shares is because you don't want to manage the portfolio and you just want to let the company do its thing. You believe in the narrative, you believe in the company, you believe in the leadership and all of those things, and you want to park your money. You believe that it's going to grow by parking your money there. And that's fine. The company's working for you, right? That's fine. But for an active option seller that is willing to treat this like a job, which is what I do, that's why I feel like I'm getting the same exposure. And then it's like, oh, you missed the 5-bagger or the 10-bagger. Let's talk about it. Let's talk about that. We're going to end with that. What is my year-to-date on Palantir?
324.
And how many shares do I own? No. I haven't owned any shares this year in Tasty, right? Because we moved over in March. No shares have ever been owned. There's still another 360 in extrinsic value here. I'm trying to get to 500,000, and then eventually I'm trying to get to 1 million on Palantir by the end of this year. Not owning any shares. I want to look at the chat. How many of y'all have made $1 million this year with Palantir? And all your little beautiful shares of your own. I bet it's less than 5 on the chat. And all the YouTube content creators, probably less than 10 collectively. And all their 10 baggers and everything that you hear about. And this is just me putting the bankroll, putting the knowledge to work on Palantir and be like, there's a milli that I can go grab on Palantir and we don't have to own shit. I'm just going to play the volatility contraction game, essentially. And I'm going to manage my emotions accordingly. If Palantir wants to go up, down, sideways, or running around in fucking circles, I don't care. I'm going to make money because the IB's right. They're paying me for the risk.
Exactly.
And I know enough about the company to be very, very comfortable. So I'm using all of the hours that I've spent watching Palantir Weekly, all of the earnings calls that I've invested my time in. And now I'm like, okay, I'd already made $400,000 with Palantir previously. Now I just made another $300,000 over there. I had owned shares on Robinhood. Over here, I haven't owned shares. There's still another $360,000 left on the balance, and I ain't stopping there because if the get's good on Palantir, I'm gonna go get me some. But the big difference is my gains are realized. My gains are realized. You're sitting on a 5-bagger or a 10-bagger. It doesn't mean shit until you're able to sell it.
Sell it, yeah.
So I don't have that emotional attachment, and I've already made peace with my taxes. I'm making money along the way. We got to pay taxes. That's just the world that we live in here. And the biggest Ponzi scheme of all time is probably the taxing system, right? A short second in this country is probably Social Security. They get everybody to buy into that shit. They don't even give you the option. So, I'm just giving it to y'all raw and uncut, bro. Hope y'all can appreciate it. So if you're willing, I can stay in this thing. And granted, you might make your money first, right? If you owned 10,000 shares of Palantir, you did extremely well. Congratulations. I'm happy for you. I'm not a hater. I'm happy for you. There was a time where we owned a bunch of shares of Palantir too. I let them go at about $80 because I thought it was ridiculously overpriced. It turns out that I was wrong. So I was like, okay, well, I'm going to go get the money that I would have made from 80 to 150. but I don't want to own any shares. And that is what created this. What y'all have here on the channel is because of Palantir. Because I was like, well, that was a mistake. I shouldn't have sold those shares. I should have kept, farting around with the covered calls. And, right by now, it'd already be at probably 120 strike or so, inching my way up, right? By January 2027 or some shit, right? As far as the expiration date. Yeah. I'm just saying, calling it what it is, right? Calling it what it is. So now I'm like, okay, well, I think there's another way for me to go get that money. And so now I've made over $750,000 on Palantir. Don't own any shares. Whether you own shares and you made 750, or I didn't have to own shares to make 750 grand, can we all agree that the 750 grand is the same? The difference is obviously in the capital gains, right? There's a difference there that needs to be discussed.
Okay.
But I know how to continue to make money off of Palantir. Palantir needs to keep going up for your $750,000 to be worth more money. That's just the reality. I just need Palantir to trade, and I'm gonna figure out how to make money with it. I'm just giving it to you, bro, raw and uncut. There's no condoms on this channel today, bro. I'm sorry. I'm just saying, dude, y'all need to run that shit back. Run that shit back. I gave it to you today. Y'all need to run that Palantir soliloquy back. I just gave it to you today. Because you can't make any more money off of your fucking shares if you're not selling covered calls or the share price goes up.
Yep.
It is mathematically impossible for you to make any more money if Palantir doesn't go up and to the right from here. That's just a fucking reality. You know what? I'm just getting started with Palantir. I'm just starting with Palantir.
Yeah.
Sometimes the truth fucking hurts, but you need to hear it. And in John, the book of John, it says it will set you free. And I'm just giving it to you. That is why owning shares is not capital efficient, because once it gets into my zone, I'm going to go figure out how to make a shitload of money. And Palantir and Hood were at my zone because they got to these crazy levels.
Okay.
And they took the biggest risk away, which was the upside risk of the short string. The Palantir ain't going to go to 200 right now, bro. I mean, so it's just going to go to 500 billion just because Donald Trump met with Alex Karp or what? I mean, get the fuck out of here. I mean, it still just does like 4 billion, and that's it. I mean, let's just be real. So if it goes down, I just adjust my strangles down, but I ain't getting hammered on all the capital depreciation.
Exactly.
Because everybody's just looking at the good side, the rosy picture. How you gonna feel when all your shares are trading at $80 and you weren't smart enough to sell them over here at 150? How are you gonna feel?
Yep.
And that's why I sold my shares at 80, because I wasn't willing to ride them down to 40.
Damn right.
I wasn't willing to write them down to 40. And I'm like, okay, I learned something about myself that I didn't know before. When I have the ability to push the buttons, I don't like that feeling. The 401k and the shit you own over there, you don't even think about it because it's not really accessible.
Yeah. So
I was like, interesting. So this is that is what created the revolution, the evolution in me. Dude, Palantir Meta was very instrumental in showing me all the shortcomings of covered calls.
Okay.
And not managed properly. There's a time that you probably just don't want to be in covered calls. Meta taught that to me.
Yeah.
Meta taught that to me. And Palantir taught me that it's okay to take a profit even if you leave some on the table if you're just not willing to ride the shares back down. Because I felt like it was ridiculously overpriced at $80, dude. I was like, dude, I can't believe people aren't selling Palantir. That's how I felt. That's how I felt. And it was wrong, right? From the standpoint of we have the answers to the test. It's trading at 153. I'm going to go to 175 before it's all said and done. Might go to 200 before it takes a breather. I don't know. I don't care. I'm going to adjust my goalposts, and I'm going to keep collecting credits. And there's a consolidation. There's an IV contraction. Payday. but I ain't dealing with all the emotions anymore. BR Baller, talk to me about your flavor of the week, bro. I talked about it.
What's going on, guys? How you guys doing?
Tell me about her, bro. Is this a brunette? Is this a blonde? What are we looking at today? Are you looking for 36, 24, 36? What are we at? What are we looking at today?
The ticker is Lulu.
So tell me about Lourdes. She goes by Lulu.
TJ, I don't know if you see every time you ask on Twitter what's like a good stock at a discount. I'm like the first reply with Lulu every time.
Let me see. This is one of my favorite guests, guys. So let me pull up Lulu over here. Hold on.
Thank you. This is my favorite trio right here. I think this is the greatest trio ever.
Lulu.
Is it on the screen yet or not yet?
No, not yet.
Okay, no worries. I just got to go over here. There we go. Okay. Is it showing it now?
Yep. You went to something else.
Yeah. No, we're good. It's intentional.
Okay.
Trading. So let me go here. There we go. So now we're going, you said Lulu, right?
Yeah.
Let me pull up the chart. It's because I get the charts better over here.
Okay, got you.
So now Lulu, right? LU. Okay, so what do we got here? So this is a Bollinger Band, and I've got it on the weekly. What do we look? Talk to me. What got you so damn excited about Lulu? Because what I see is this is what date is this? This is since January of 2024. That was the peak. So for New Year's, Lululemon said, "We going not up and to the right. We're going down and bottom. We're going down."
Yeah, basically.
So it went down, and there's a huge ass candle right here. So they pissed somebody off on March 18, 2024. And then it went all the way down, been itching its way all the way up. It looks like here's a double top. Some could argue probably a triple top. I'm not sure. I'm not super technical, but that didn't work. That's obviously bearish. That was on January of 2025.
Mm-hmm.
And then it's been going down. And then this was like, this is like, oh no, this was here we go. So it started going back up again in May, and then another big ass candle, fall from grace. So one thing that really, really sticks out is that there's been several occasions where there's some really, really nasty red candles on the weekly. So talk to me. Why now? Because when I think of Lululemon, I think of overpriced Nike. That's what I think. As far as like the attire, it's more like a status symbol now. You see those little headphone looking things, right? As far as the little emblem, and I think it's like the who's who of the gym. The cool kids in the gym wear Lulu.
Yeah. So basically, it's trading at, because like I'm only a fundamental trader. Basically, I don't really look at the chart, but it's number one. It's super oversold. The RSI on that is 10 currently.
So I have it here at 37. Are you on a daily or are you on a weekly? Like, where are you looking at?
Oh, I'm not gonna. I just use this app called Stock Screener.
Yeah,
and I think it's called the statistic RSI. I don't know. There's different RSIs, but it just said it was super oversold. Basically,
I don't think that's true. It was oversold at one time, like over here in March the 13th, 2025. It was oversold. So you see these little blue lines on the bottom of the screen?
Yeah.
If it's above the blue line on the top, that's 70. Overbought. That's overbought. And if it's below the blue line on the bottom, that's oversold. I have it on the daily candle right now. Uh-huh. So I could do that for the weekly candle. You'll see the same thing. This is kind of like the art. This is like the oversold Bollinger Band, if you will, right? Uh-huh. The 70 and the 30. And if I put it on the monthly, you're going to see that on the monthly, it's spent more time in the overbought territory, and it's never been in the oversold territory on the monthly. For the 1 year, it doesn't show you enough, right? I'd have to figure out how to expand it. But so let's go back to the weekly. It's just one that I like to use. But anyway, so besides it being oversold on the technicals, talk to me fundamentally. Like, this company make money? Does it not make money? Like, there always has to be a bit of a reason as to why the stock is trading where it's at. So what is the issue here?
So after their guidance in like their earnings in beginning of June, basically they just cut their guidance because of the tariffs and everything. So then it plummeted. I think it went down like almost 20%. And then
so is that here? Was this big ass red candle right here?
Exactly. Yes.
3 red candles here. It fell from grace big time.
It did.
And it was from 350 or 344. I don't know what that is. There's a little wick there. And then now it's at 231, or what is it trading at currently?
Yeah, 232 almost. But yeah, I mean, I don't know. After every earnings, it seems to just plummet, and then it just like starts to slowly recover. But it's trading at the cheapest earnings multiple in over 10 years.
Okay.
So it's like fundamentally very attractive, especially compared to historic levels. And they're still very profitable. Their numbers are still really good. They're still at like, I mean, I think this year they were at a point of record revenue earlier this year. So and they have a low share flow, only 100 million. And their forward PEs are all lower than the current PEs, which means they're still growing. They're just growing a little bit slower. So, and I think all the tariffs and all the bad news is priced in.
Uh-huh. Are you able to see the stock analysis or no option? Good. Is it showing? I had stock analysis up there.
I see it. Yeah.
You're able to see it or not?
Yeah.
Okay, so I'm looking at this real quick, and I'm just like, so revenue trailing 12 months is 10.7. So look at the revenue chart. So this thing is going up and to the right on the revenue. Are y'all seeing that right now or no?
It's beautiful, yes.
So that part's good. That's angle. Look at quarterly. I can see the issue there. You see how it went down a lot, dude. Like, look at that. Look at that. Look at quarter over quarter is absolutely no bueno. So was that all tariffs? Because how could that have possibly hit the balance sheet right now?
No, I don't. No, it wasn't even tariffs. I think at that point, I think it's a very volatile, like, because it's like seasonal. I think with this, it's like, since it's apparel, that's what's risky about them. You know, their earnings are they're gonna fluctuate a lot. Like Hershey's, for example, and it's not apparel, but Hershey's is a similar stock where their earnings could be up or down 50% every quarter.
And I'm showing y'all the revenue, guys, because to me, if I don't like the top line, I'm probably not going to like the bottom line. You know what I mean? So that's just the way that I look at it quickly. So it's definitely going up and to the right, but there's a lot of seasonality here. It's not like it's not all peachy and creamy. So we look at it here. So this is January quarter strong. January quarter strong. The February quarter was strong. So it tells me new year, new me, Lululemon benefits, right? People are going to go buy all. It's like my wife. When she starts going to the gym, first thing she wants to do is go buy a bunch of clothes. Same with me, right? We want to go buy clothes because if I buy this new pair of Nike shoes, I'm going to work out harder, right?
Yeah, exactly.
Let them say that's the psyche of the human being, right? We're very fragile. So it tells me new year, new me. And then it's kind of flat after that. So they pretty much rely on new year, new me. That's kind of been their whole business.
Yeah.
January, February. And I'm not sure why these bars are different. I don't know if they don't do earnings at the same time or what it is, but it seems like they make a lot of money when towards the end of the year, people decide, hey, I'm going to get in shape again. And I'm going to go buy all this cool ass apparel. And they end up as loungewear around the house, right? So why doesn't the market like them? Just because the tariffs that Trump talked about are imposed, or talked about imposing. He walked it back, and maybe they're still on. Yes, no, maybe so. And the market just decided that Lululemon was going to take a shit, because what I see here in the revenue is that at the end of the day, the revenue has gone up and to the right. Now the growth has slowed down substantially, right? Like it was 42% in 22, 29% in 23, and it's been going down since. It's still growing. It's just not growing at a nearly rapid rate. And that's because it's easier to double your revenue when you're at like 2 billion versus when you're at 9 and 10 billion, right? So as the bigger the company gets, the harder it is for it to grow so fast, if that makes sense.
Exactly.
So why do you like it so much? Because to me, it's a declining growth story.
I think
eyeballing it real quick.
Huh?
Just eyeballing it real quick. It's a declining growth story.
It is. It's just I love the risk to reward here. I feel like it's bounce, and like to me, the number one reason why it fell, and obviously because it gets heavily impacted by the tariffs, especially because they have so much exposure out of the U.S. So that's why their guidance got cut short. But I mean, I really don't see any like problems with the risk to reward here.
But this is the issue right here. This is showing a different graph. You see the revenue year-over-year growth? You see that right there?
Yeah.
That's the issue.
Yeah, I see that.
That's the issue. That happened to PayPal.
Yeah.
And look how long it's taken for PayPal to recover.
Yeah.
And what about their margins? Their margins are still strong so far.
Yeah. It's definitely not like, I mean, they're not growing as fast for sure, but
well, they're a bigger company now. I mean, dude, It's hard to grow $10 billion in revenue.
Yeah, exactly.
Money, dude. They're bringing a lot of money through the door.
Yeah, 100%.
But whenever you're not growing anymore, revenue year-over-year growth is obviously been stagnating now, going on 4 or 5 years. The peak was obviously in 2022, right?
Yeah.
We can all see that plain as day. Then you're not going to command a high multiple. That being said, what is their multiple at in comparison to, I don't know, like Nike? Like who's their competitor? Like Nike is the one that stands out. Under Armour stands out. I don't know who else would be in this. In this
like
same.
Gap, maybe Gap, or not.
I don't know. I mean, this is your investment. I would think that you would know that stuff. It's like, if you're going to invest on a house on this street, it's a real good idea to know who your comps are.
Well, it's still trading lower than the industry average. The industry average is 21 PE ratio. Lulu's at 15. It's trading below the price to book ratio industry. The industry is 6.84, Lulu's 6.49, and yeah. So it's still trading below all of them. And a lot of managers are buying it. It's definitely a buy. I'm telling
you. Yeah. So I'm gonna take some words from Jim Cramer. I know a lot of people aren't fans of Jim Cramer, but I'm gonna take these words real quick from Jim Cramer. I saw him speak, I don't know, years ago. And he said, I don't care where a stock has been, I care where it's going. And it resonated to me because a lot of people give that guy shit, but the reality is he knows a lot more about the markets than most people will ever. Like he's probably forgotten more about the markets than most people will ever know, right? Mm-hmm. Like the guy is very, very involved in the market. And you can't really care about where the stock has been. It's about where is the stock going. So like, what is the catalyst? Because you say you're a fundamentalist, right? So fundamentalists rely on catalysts. I know I do. So what is the catalyst to get Lululemon to the promised land so that it takes you to Valhalla?
I think number one, I think there's going to be more trade deals, which will help them, especially clear their guidance coming up, and I think there's going to be a buyback soon. I don't know. I mean, it's just a rumor, but that's what I think might be happening, especially before their next earnings. They have a very strong cash flow and little debt, so they have a really good, healthy balance sheet. And the intrinsic value on it is $285. If you ask any, like, if you look at any website or any AI thing, they'll tell you intrinsically at liquidation it's worth like 285. So it's definitely undervalued compared to where the growth potential is.
Gotcha.
Oh yeah, renting's also in it.
Yeah, dude, I see a lot of people talking about it. I'm just my thing is always like, what is the catalyst? Like, they're trading over here at a reason. So why is all of a sudden the market going to go from not liking them to liking them? Because I spent probably a year or two of my life, when I was first like figuring out how to sell options.
Mm-hmm.
And I would just literally just start with like the 52-week lows. And then I would look at the 52-week highs. And I was like, well, the stock's closer to the low. Well, what's going to happen when it just goes back to the high? How much money would I make? And I would start doing all these crazy projections. Rarely did it work out for me.
Yeah, it's like gambling at that point.
Right? You gotta have a thesis, right? Like you gotta have a thesis. Like, I don't care what anybody says about Tesla. Tesla is running the hype. It's riding the hype train right now. Fundamentally, that stock should be trading at probably 100, 150 bucks. I mean, if you just want to be objective about the fundamentals, now we start talking about what can be an Optimus and full self driving and robo taxi without somebody riding with the kill switch right here. I mean, there's a lot of positive prospects for Tesla. So if somebody's sitting here, they come on the channel and they're like, hey, this is why I think Tesla is going to be trading at $1,000 by the year 2030 or something like that. And they can give you some compelling arguments. It makes sense. I could see that narrative playing out if there's a lot of focus, right, from Elon Musk and the company, right? Yeah. I can see that narrative playing out. Now the whole Kathy Wood, and it's going to go to these crazy ass numbers. I don't know. I don't know enough about her models and how they get there. Yeah. But I could see $1,000 probably by like 2028, 2029, when Optimus is like a real thing. Full self-driving is like, hey, why can't we agree that Tesla solved it in like 2024, but they didn't get credit till like 2026 or 27? It's because maybe the market hated Elon Musk so much. Who knows, right? I don't know, because it's always like a year later they're going to be arguing, or 2 years later they're going to be arguing about whether or not we went through that recession or not, right? Because they kind of changed the definitions of recession and stuff. So all I'm saying is I could see, even though Tesla is very overvalued from a very basic fundamental perspective right now, I could see how it's going to appear undervalued 3 to 5 years from now if all of these narratives play out and these catalysts come to pass, right? Everything comes to fruition. But I don't know that you've really looked at Lululemon from that lens. Like, where I like, let's go Palantir, right? Because I got out of that stock because the fundamentals were out of whack in my mind. They still are. Yeah. But dude, the story keeps getting better. Now you got the president saying 60 billion, and Palantir's probably going to get their fair share of all of that stuff. Dude, this could be one of those things where in 2030, there's a lot of people, myself included. Luckily, I'll be selling Strango, so I'll be okay. They'll be like, shit, man, we should have gotten a lot of those shares at 100, 125, yo. Because those are a lot of people that were contemplating it at 20, 30, 40, and 50 that are feeling that way now, right? So, this thing does another leg up to 200, 250, eventually probably 500. That's probably what it would take for it, or probably 600 or 700 for it to get closer to that $1 trillion valuation. And because I think that's where it's going. I just don't know what the path looks. I don't know what that path really looks like, but I do think that within the next 10 to 15 years, Palantir is going to be a $1 trillion company. And there's a lot of people that have that belief, and they're like, I'm just going to own the shares and weather the storm, and I don't care because I know that's where we're going, right? They're strapped in and they don't give a shit. That's what owning shares is.
Yeah.
I decided that I'm not really wanting to be on that. I'm like, well, how much can I make with Palantir every 1 to 2 months when these strangles play out? And I'm like, I think I can make $150,000. That's the train I want to be on.
Yeah.
That's the train. And I decide when I want to get off at any time. Like, I don't want to be locked in to final destination. You know what I mean? I'm never going to die Palantir holder anymore, or any stock for that matter. So,
for sure.
I'm challenging you a little bit, BR, because I think there might be a little flaw in your logic, and not just with Lulu, but with all the stocks. Is you have this idea of this is where they used to trade, this is where they're trading now, this is what the industry average is. There's going to be a reversion to the mean, and I'm going to get paid. But sometimes when stocks fall out of favor, they can stay there a lot longer than you think. And the reason I'm bringing this up to you is because I know that you like to play leaps, right?
Correct. That's all I do.
And leaps expire.
Correct.
So just I know you want to have your undefeated record in tax. I'm just helping you out here. So based on all that, how much have you dug into this company besides looking at that generic P and PS ratios and PEG ratios and all this stuff? That there's a lot of people saying that this is a new stock market now, and there's gonna have to be a different way to measure these stocks now, because that's from a thing. Because Elon Musk is in that camp, right?
Yeah,
he's in that camp. He's like, hey, Yanni, we need to start figuring out a different way to value these stocks, because that shit ain't gonna be working no more, because there's so many verticals that are very hard to quantify.
Yep.
The thing is, I was gonna say is, like, with Tesla, I get it, because there's a lot of stories ahead. There's a lot of growth, like, potential. But the thing is, it's like right now it's trading at 175 times earnings. Like, the risk to reward doesn't make sense. Like, I'm being honest, in my opinion.
To you, but if you believe the narrative that there's going to be 20 billion robots roaming the face of the earth, so like 2 to 3 robots for every human, that is a huge ass TAM. Who owns manufacturing? That's Tesla. Nobody manufactures, and I will say it again, nobody in rabbit ears, nobody manufactures like Tesla. If Tesla has a moat, it is manufacturing. Nobody builds shit better and faster than Tesla, bro. They have figured it out. Pretty damn impressive.
No, I get it.
I'm just saying, how much of that market cap, how much of that TAM, that total addressable market of the robots, just the robots alone, forget everything else.
Yeah.
Could Tesla realistically capture? The answer is probably a lot.
Yeah, I just think there's a lot of, like, speculation, a lot of good things already priced in, because it's like, there's a lot of things that could not work out too, you know?
That is a fact. There's execution risk, and then there's key bad risk. So if it happens to Elon, the stock's going to $150 overnight.
Oh, 100 probably. If he's out, I mean, there's a lot of premium in him, honestly, just alone.
Bro, I used to say on this channel, I thought Tesla would be better off without Elon Musk. What a fucking idiot! Please don't roll that tape, Alex. A few moments later, no. Please don't do that to me. I need to go find that video and delete that shit. Because I said it. I think I had Carlos and Vitaly on the channel with me when I said it. Oh my God. This is what sucks about this channel, bro. It's all there, right? I said, I thought because he lacks focus, I think that Tesla would be better off without Elon Musk. And the more that I buy into this man's vision, the less that I believe that statement. Mm-hmm. So I have to say that I flip-flopped on the Elon Musk narrative. I think as goes Elon, goes Tesla. 100%. And I feel like Elon has abused Tesla shareholders a little bit, selling a bunch of shares, buying X or Twitter, and the Tesla shareholders were used as an ATM, and they don't benefit from any of that stuff. And Elon goes and builds all these other companies, these verticals, uses all the engineering, all the infrastructure from Tesla to go build the Boring Company, to go build Neuralink, to build Starlink, to build fucking SpaceX and whatever else I can't even think of anymore, because there's like 5 or 6 companies this dude owns, right? And that's how he's the richest man in the world. And then there's people like, all right, he hasn't gotten paid with Tesla. It's unresolved and all this other stuff, right? His compensation package. So give him a pass. But at the end of the day, as a Tesla shareholder, you don't benefit from any of that shit. I'm just, calling a spade a spade.
No, 100%. Like
Tesla is the hardest stock to own, in my opinion. Out of the entire stock market, Tesla is the hardest one to own for those reasons that I just said. You deal with all the volatility. You have the key man risk. You have the execution risk. And you have the fact that this dude and his brother know how to dump shares at the top like nobody's business. I mean, Kimball must. Bro, people talk about Nancy Pelosi, bro. Kimball knows how to sell some Tesla stock. This dude, every possible top, if you look at it historically, Kimball been Johnny on the spot. Dumping shares on us like crazy. But you don't get to participate in any verticals. And now they talk about, well, maybe we'll be able to participate in XAI at a retarded valuation compared to what we could have been in early on. I mean, bro, it's a tough stock to own.
No, 100%. I'm with you on not owning shares too. It's definitely not capital efficient. I'm with you on that. Like Leaps is the best way. Or Strangles. Like I love what you do. The Strangles. I used to do like put credit spreads and call credit spreads. It was kind of a strangle, but that's like the only way you can do it on Robinhood.
Yeah, is that like an iron condor?
Yeah, I just like I was like that's a little stressful. I'm just gonna do Leaps and then, but it's different. I mean, because it's easier for you to roll. You have like infinite money, But for me, I have to like be careful. But you could do it easily on Lulu. Like you could do like 200 and 280. That's a good.
On who?
A strangle on Lulu, like saying it's going to stay above 200 and then below 280.
Take some.
Did it pay you any money option?
Huh?
Oh, I'll check for you.
You said do what again?
A 200 put.
On what?
A Lulu.
On Lulu.
And then maybe. I don't think it's gonna go above 2. It depends when the expiration. If you do like a month, do it before their earnings. So like
no money, man. You can only. I mean, at 200, you're only taking in like 99 cents. I mean, you can do like the 210, but I wouldn't even do it because the IV rank is kind of low. You is getting paid, but it ain't that much though. You could do something like the.
So I got one that I'm putting on.
But that's only one
that I'm putting on. I mean, this part's again. This is just because Tasty Trade platform's so awesome. Let me show this one to y'all real quick. And I got to run, dude. I want to spend time with my wife and my dad and I. We have this thing now where we're doing Thanksgiving dinner or the Thanksgiving lunch at Cracker Barrel because they do it on Thursdays. So I'm gonna go pick us up a plate and go eat with my pops.
Oh, I haven't been there in forever.
So anyway. So this is the one that I came up with. If I was going to do something, it would be the 200 put, 64 days out.
Yeah.
200 puts, a 20 delta. And then I do the 300 call, which is the 13 delta. And I do 50 contracts. I utilize 51,000 in buying power to bring in 42.
And that's really good, actually. That's free money. That's actually free.
That ain't free money. If you look at the IV rank, it's only 17.
Yeah. So to borrow words out of option, you have to stay in this thing because you can't play for an IV contraction. What contraction? So there's no like that IV would have to move up to like at least high 20s, low 30s for that to make any sense because if you're selling the delta neutral strangle, which is what I'd be looking to do in that scenario, you literally have to ride it out because since you're delta neutral, there's no price action that's going to help you. So you're only paying for the you're only playing for the contraction and the passage of time. So if you're only playing for the contraction and the passage of time, it sure would make sense to get paid a lot more money on that premium. Even though the premium feels exciting, it's intoxicating when you look at, oh, I'm getting 42 grand and it's only using 51,000 in buying power. There's flawed logic only using that metric, in my opinion. You want to expand more on that option, and I got to run.
Yeah, I mean, because just like what you're saying, what TJ's saying, you know, you in that 64-day earnings is already projected to be somewhere around September the 4th.
Yeah.
And with volatility in the IV rank being low, what's going to happen? You probably get an expansion, right? Because that volatility normally pick up because now you got that binary event, right? So that's going to hurt you by doing like a strangle, you know.
No, 100% makes sense.
Yeah. So anyway, I got to run. I'm telling you, as your father, this is the 4th pro you brought me in the last month. You got to keep looking, son. This one ain't it.
Oh man! All right, I'll find out.
I'm just messing with you, dude. I want everybody to win. I hope Lulu goes up and to the right. I can't see it playing it for me right now. Maybe on the other side of earnings, or if I could take advantage of some of that volatility expansion, then I'd be interested in putting on a trade very similar to what I just showed right there.
Absolutely.
And you guys are the best. Thanks for having me.
I appreciate you guys. Y'all always are welcome anytime. I got to run, man. TJ the Wheel Deal signs off with Option BR Baller, flavor of the week. As always, may your sky stay blue, stock green. Peace out. God bless you guys.
Peace
All
out.
right, y'all. Good night.
Thank you. Thank you.